The home. Let's start with this. The home mortgage loan guaranteed by the Federal Housing Administration, the Title II mortgage program, is guaranteed by the Federal Housing Administration. Okay? This is because they are authorized under Title II of the National Housing Act that passed in 1934. While the original law was relatively limited in its scope, in today's society, the Title II loan program can work for many home owners. Okay. I want to give you a little history on it. The National Housing Act. In the aftermath of 1929, the stock market crash, the government looked for actions to try to fix the economy. One of the earliest acts was the creation of the Federal Housing Loan Bank Board in 1932, in the hopes that it would spare and better make availability of mortgages to the people. While it didn't help very much, the gradually improving economy created an opportunity for government to support increase. Okay, get me back here. My computer is acting up a little bit, so please forgive me. My computer just did something crazy here. Okay, here we go. Gradually improve the economy, created an opportunity for government to support increased homeowners through the passage of the National Housing Act of 1934. The Title II of the law created a mutual mortgage insurance program and the Federal Housing Authority. The Title II loan history. The $10 million original fund under Title II was used to insure mortgages, and while it helped some prospective homeowners, the scope didn't reach to lower income families during the period leading up to World War II. The government created new agency and programs that would set the stage for greater involvement in housing. After the war, these programs and the FHA worked together with new laws to increase the scope of FHA mortgage insurance program. Little history of the Title II. It is not no brand new particular program. The Title II is a program that was back in the beginning. It started back in the beginning. So it is a program where you can easily have comfort to know that this program certainly is a program that's not brand new. It's been out for a long time. Homeowners is a goal for many people, but getting an affordable mortgage can be very difficult for so many Americans. When you're just starting out, well, the Title II mortgage are designed to help you through this difficult period. They're backed by the Federal Housing Administration and were created to make it easier for Americans to get the American dream, their home. Now, there are several versions of the Title II mortgage programs that are available to those who qualify, making this program accessible to a large number of people. Isn't that something? Today's interest rate market closed at 3.75% on a fixed rate mortgage. 3.75% 3.75% on a fixed rate mortgage, which was applied on a 15-year fix. That was the 15-year fix rate that closed today. And ain't that something? Wow. Okay. Let's talk about the Title II mortgage. The Title II mortgage programs are any of the several types of mortgage created under the provision of the Federal Housing Administration, the Title II program. They provide mortgage insurance insured by FHA and may also include other costs that are not normally covered by the mortgage loans. What are these costs? Well, these costs are not normally covered by the mortgage loan, such as the cost of labor and material and repairs to the home that you are prospectively looking to buy. Qualifying for the Title II. What does it take to qualify for this Title II? To apply for a Title II loan, you need to have a 2-year steady employment, full time, 40 hours a week. Overtime do not count unless it's on a consistent level. That you're getting overtime and that you can prove within that 2 years, that's all you've been doing is overtime. Companies like Ford Motor Companies that offer this, other companies that from the steel mill and many other companies that offer this consistently, that where they can clearly see that, not only see it on your W-2, but they also can see this on your check stubs. They can clearly see this because you're going to have to provide check stubs. You do know this. Okay, so they can see this. All right. If you just have overtime just in seizing plug-in points, meaning maybe get overtime just in the fall, maybe get overtime just in the spring, maybe get overtime just in the winter, it can be calculated into your total gross amount, but it will not be calculated into the qualifying gross that would qualify you for the loan. So it'll be looked at as extra money that you may have. It'll be listed, but it won't be used in a qualification status unless you can prove that you're getting this OT throughout the year. Some lenders may require you to have it, to see consistency for 9 months or see consistency for each year for 10 months. Some may require for the full 12 months. Okay. So again, this is how overtime can be calculated. If you have it like that, then that overtime will be calculated into your qualifying amount. 2 part-time jobs does not equal 1 full-time job to qualify you for a mortgage. No, and no. That do not happen. If you have a 7-year part-time job and a 3-year or a 2-year full-time jobs, then yes, you can use that part-time income along with that full-time income to qualify because of the consistency to what you have there. Okay. The length of time that you was there. But if you have 2 part-time jobs, 1 year, 1 2 years, part-time does not count. Part-time is what it is. Part-time is what it is. It's temporary income. I don't care how you narrow it up because the majority of part-timers don't even offer you benefits. Okay. There's no benefit offer on the majority of the part-time, right? So you get no benefits. So, and a lot of companies are going to part-time, all right? So I'm just letting you know when under the qualification study, that you need to have 2 years of steady, full-time, 40 hours a week income. Hey, Rick, what if I'm at 37 and a half? That's considered full-time. Okay, that's fine. That's considered full-time. Okay, when they do a verification of employment form, you're going to sign these forms now. You're going to sign these forms with your loan professionals. You're going to sign these forms with a mortgage broker. You're going to sign a verification of rent because they're going to verify whether you are paying the rent on time because that's part of that qualification status too. Okay, so they'll send it out to the corporation for which you're employed at, and then they'll verify that 37 and a half hours is what they consider full time. And yet you receive the proper full-time benefits in that particular funding. Now, if it's 36 hours, and yet you don't get no full time. Get no special qualification status, meaning that you get no insurance, you get none of the other stuff that comes with full time. Then you may find yourself having a little rough edges around the edge through some lenders that may not like it because they kind of like look at it as a part time, even though it's been recorded as a full time, but not treated traditionally like a full-time. Certain lenders, feel a little leery because the investors that may want to buy the loan may feel that same way too. So you could find yourself have to go to a few of the lenders before you can find one that will say, okay, we'll buy that. And if they do, then they're going to buy it, and interest rate is going to be just a little higher, maybe 1/4 of a point or 1/2 a point a little higher, because they're taking on a little risk in that factor in there. Just throwing it out there just so you can understand, because there are some people that meets that kind of standard. So just got to get that to you. Okay. But anyway, you need in the qualifications status, you need a steady 2-year full-time, 40 hours a week income, and with no past, listen, this is very, very important. There's no exception to this. With no past due federal liens, such as student loans must be current, tax debt must be paid, not in payment plan, must be paid, and any court judgments against you must be paid, not in a payment program, must be paid, and all child support must be current. Okay? Your credit must have been stable or improving for at least the last previous 12 months. And any bankruptcy filing must have been discharged for at least 24 months. Okay? Any foreclosures that you may have had in the past now must be at least 3 years old. It must be 3 years, not almost 3 years, 2 more months. It'll be 3 years. It must be 3 years or older. Okay. And you must have at least 12 months of on-time rent or lease payment. No exceptions. Okay. Qualifying home types. A single family home, a multiple family home, that's a 2-unit, 3-unit, and 4-unit. That's considered under the residential market. Now, once I get through with this, I'm going to tell you about at least 2 other versions of the Title II. I'm not going to give you all of it because I want you to go and do research. See, Mortgage Talk gives you information, and we encourage you to go out and do further research, because this is going to help broaden your horizon here. Because since there are several versions of the Title II, this particular version may not meet your qualification status. But if you know what the other version is called, it is called a Title II 245C. Okay, that's the other one that I will tell you a little bit about. And so oh yeah, that fits me better than this Title II. So you see what I'm saying? So you have an idea of what this does. There's one out there that even if you find a 5-unit building that's considered under commercial, that one out there can qualify you under that. I'm telling you, there it is. That one out there can qualify. This one won't. This particular Title II program will not. But the other version of it will, and I will go over that with you. This is why it's important for you to go out there and do further research. You can get all this information just by going to HUD/FHA.gov and go under or type in Title II mortgage program, and it give you all of the criteria, all of the qualification. And guess what? Since it's backed by FHA, it will give you the lenders that are signed up with FHA. Isn't that something? So all you have to do is just type in your zip code, and then it give you the lenders that's in your area there that you can go to and that you can apply for the loan. Okay. Isn't that something? Everything is right there, at FHA.gov or HUD/FHA/Title II mortgageprogram.gov. You can get them in so many different ways, and you'll get HUD website directly, or you even contact your local HUD office. There it is. Contact your local HUD office and tell them that you're interested in the Title II mortgage program, but you got to be specific on which program that you're talking about. Okay, so you got to be